Standard costing is the practice of substituting an expected cost for an actual cost in the accounting records. Subsequently, variances are recorded to show the difference between the expected and actual costs. Standard costing involves the creation of estimated, i.e., standard, costs for some or all activities within a company. The reason for using standard costs is that it can be too time-consuming to collect actual costs, so standard costs are used as a close approximation to actual costs. Standard cost variances. A variance is the difference between the actual cost incurred and the standard cost against which it is measured. A variance can also be used to measure the difference between actual and expected sales. Thus, variance analysis can be used to review the performance of both revenue and expenses. There are two basic types of variances from a standard that can arise, which are the rate variance and the volume variance. A rate variance, which is also known as a price variance, is the difference between the actual price paid for something and the expected price, multiplied by the actual quantity purchased. The rate variance designation is most commonly applied to the labor rate variance, which involves the actual cost of direct labor in comparison to the standard cost of direct labor. The rate variance uses a different designation when applied to the purchase of materials, and may be called the purchase price variance or the material price variance. A volume variance is the difference between the actual quantity sold or consumed and the budgeted amount, multiplied by the standard price or cost per unit. If actual costs are less than standard, it is called a favorable variance. Actual costs are more than standard, it is called unfavorable. Under a standard cost accounting system, cost of goods sold is stated at standard cost and the variances are disclosed separately. Unfavorable variances increase the cost of goods sold. Favorable variances decrease the cost of goods sold. In this way, the income statement is adjusted to actual costs.